you're here, please like the video, subscribe, and share the content as well so that more people get to know about Bharata First. Well, ever since Russia began invading Ukraine, and the situation is extremely tense, of course, but it has also had an impact on the oil prices, which in turn is likely to have a big impact on the global economy as well as the Indian economy. Oil prices have reached a 14-year high ever since the invasion. And back home in India, of course, the prices have not started going up, looking at what many people expected, that the prices would go up. But the elections are said to be one of those reasons why oil prices have remained pretty much the same. But in the due course of time, the oil companies in India too will have to pass on the burden to the consumer. To what extent that will be done and how much of an impact is it likely to have on the Indian economy? That's what we're going to discuss in this edition of Big Picture. Joining me on the program today are Dr. Ajay Dua, former Secretary, Ministry of Commerce and Industry, Government of India, and Shubhamoy Bhattacharjee, Consulting Editor of the Business Standard. Thank you to both my guests for joining me on this edition of Big Picture. Mr. Dua, let me start the program with you first. How would you look at this situation? Oil at a 14-year high, and now that US President Biden has also added oil and gas to the sanctions list. That wasn't done so far. Now that has been done. Putin has also warned the West that the oil prices may go up to $300 a barrel. Where do you see all of this going, and how is it going to impact the economy, especially at a time when the global economy is just about, recovering after the COVID-19 pandemic?
Frank, I am not at all optimistic about the way the global economy would conduct itself in the weeks and the months to come. There is, on the one hand, a fear of inflation continuing, and if it is not, even if it's not $300 a barrel, even if it is $200 a barrel, everybody's economics, governments in every country, businesses in every country, they would see those going for out of the window, virtually going for a toss. Along with that, if the prices go up of oil, it's going to have a straightforward impact on the government's finances, be it the foreign exchange outflows, because no one is, the more trade will have to take place outside, say, Ukraine and Soviet Union. And Ukraine, while it is in this condition, is no position to assure export of its oil. But Russia, of course, because of sanctions, the availability will come down. The availability comes down, it is going to hit the government's budgets, is going to hit the government's foreign exchange position, and all that in turn will cause an economic stagnation. And the word is stagflation, inflation on one side, stagnancy on the other side, which wouldn't do the world any good. And India, with its high import dependence for oil, 86%, plus say 50 to 60% of the natural gas and some amount of even LPG coming from outside. No, I shouldn't say LPG, LNG, basically, coming from a fair amount coming from outside. We are going to feel the pinch with, as you mentioned in the introduction itself, $70 budgeted. The price yesterday, $127. Let's see when the Western markets open, or must be opening any moment now. In the US, what will be the price? But it's bound to be higher than yesterday. NYMEX higher, our Brent moves almost in sync, the Brent price, which is relevant for us. So I don't see the economy of the world, economy of India, not getting hit. The question is, how much can we soften the blow? And are there any factors in our control which we can leverage?
Absolutely. That's what I'm going to come back to you and discuss about, what are some of the aspects that we can control and how much we can control, really. But before that, let me bring in Shubhamoy into the picture as well. Shubhamoy, As far as the oil prices are concerned, we've seen that it has been election season and hence oil prices have been kept at a check so far. But the results will be out very soon. What happens after that is anybody's guess. But the expectation is that the oil prices are going to go up. The government too has said that it is for the oil companies to decide, what they're going to do with the oil prices. How far can the oil companies really try and soften the blow, so to speak, or to what extent?
It's not about prices going up at one go. I mean, that really doesn't make a difference. I mean, supposing you can calculate any which way what is the borrowing which the oil companies do. It's currently about 1,50,000 crore. And so if you look at it in that way, there is no doubt that oil prices will go up. But whether it will go up in one, obviously no government will allow prices to go up at one stage immediately for 15 rupees or 10 rupees. But after having done that, what Mr. Dua is saying is right, the prices will go up. So it could be like, grow up. So basically what I suspect is the government will sort of, phase in the price rises. Say, supposing it rises by say 50 paise once or 1 rupee, there's nothing which stops if prices are set every morning at 6 a.m. in the morning. So the prices can be changed every day or every week to gradually keep on rising. The point is, where will it ultimately still go up to, say in a period of 1 month, 2 months or 4 months? That's the point. You're not looking at, nobody is expecting prices to jump all of a sudden and to put the economy in a shock. That will not happen. I'm sure about that. But even if it doesn't happen, the gradual rise will also be equally, fairly damaging. It will soften the blow in terms of, letting people absorb it, but still the prices will rise. There's no doubt about it. These are astronomically high prices. So obviously people will, between the government, that is the center and the states, and the consumer, the burden will be shared. In fact, the point is that if you don't raise the prices now, gradually over time, then what happens is that the risks run higher for the government. Because what happens is people think that, okay, fine, prices should not be raised. First of all, that's out of the question, as Mr. Dua explained. Prices will be raised. If prices are not raised adequately, then what happens is the government will have to bear the shock by borrowing more. That borrowing more has got more difficulty for the economy because inflation rises much more by that route than by the expedient of oil price rise. No matter how much we might say that, okay, the common people also use public transport, but the government can always offer a subsidy there, rather than keeping all prices of petroleum products under a control. That doesn't help. We will have to take in the shock. So depending on whoever has got what capacity will be taking in the shock. So there'll be differential price rises. That's expected. And obviously, the more the shock is taken by the upper income groups, the borrowing impact on the government, both at the center as well as for the states, is lower. That means the lower income groups get protected. That is the way the price impact will have to be factored in. So there's no other way for us but to accept that this is going to happen. To what extent it will happen, we can discuss later. Yeah,
absolutely. To what extent it will happen remains to be seen, but it reached record highs in November 2021 and the entire nation, of course, was upset with what was happening. So, Mr. Dua, coming back to you now, what are our options really? Because looking at the oil prices right now, they are at a 14-year high. So the expectation is maybe not immediately, maybe not in a day or two, but eventually, maybe in 2 weeks or 3 weeks, the prices are going to go back to what we saw in November or, in November of last year. What can we do to try and offset that? What are our options?
Couple of them, Frank. Let me just first comment on the supply side. One, Russia has offered us reportedly some oil at a discount of 27 to 30% when the price was $110 or $112. Now that the price is more like $130, and the fact that we are amongst those few countries of the world who stood by Russia in the multilateral forums and elsewhere, we could bargain and say, give it to us at 50% discount to the current Brent price, because it was 27-30% to the Brent price. So same thing to some of our friends in the Gulf, we would have to turn to saying, all right, higher than the previous, but certainly not the market price. We are your friends. That's one. And third one, which comes to my mind, is Venezuela. President Maduro, I think that's how he's called, who was otherwise boycotted in the Western world for his autocratic style, his rigging of the elections and other things. He's made a wonderful offer, if I might say, saying I can pull out 3 million barrels a day, and I'm willing to offer it to the West and talk to you about the price, but you forget my crimes and my mischief of the past. So the West has to take a call. Venezuela makes sense to us. Russia makes sense to us in another sense also. I'm still on the supply side. ONGC and Oil India have invested in assets in Siberia and some of the oil fields in Venezuela. I think in Venezuela, it's even BPCL. If we can, as they're owned by the government, we can tell all these 3 companies of ours, plus GAIL, which has also invested overseas, saying that your share, which is you are entitled to, all of them are entitled to a particular share which is related to their equity in those assets, saying you're going to bring that all yours produced to India rather than sell it in off markets outside. To that extent, it softens a bit, because somewhere we've got an 8% share, somewhere it's a 4%, 8% of a large field in Russia means a lot, that kind of thing. So that's one on the supply side. So on the demand side, I think as Subboy said, we would have to pass on that burden to some extent to the consumers. But as we all know, the number of or the share of the population which is a direct consumer is not so much. Guys who own autos, etc. Only they'll be much more in urban areas or large rural areas, etc. But where everybody gets hit or is going to get hit is in the pricing of the products, because public transportation, whether be it buses, passenger movement, be it trucks, be it rail, the prices of freight there is going to be affected in the moment you raise the prices of crude oil. And that hits to the poor man probably more. Poor man's 100% of his income gets spent on consumer goods, whose prices will go up, whereas of the rich guy, it might be 10% or 20%. So while direct taxes are progressive, the indirect taxes are always regressive. So we would be hitting our consumers much more. Finally, I would say in the medium term, and this is an opportunity, we made promises at COP26 of our renewable energy target. By 2030, 50% of our fuel is supposed to be, renewable energy, and our carbon emission to be down by 45% or so. This is the time. Let's focus with more investment, public, private, making it attractive, whatever has to be done, so that we, in the long term, our dependence on imports of fossil fuels, and in our odd case, even carbon, thermal coal we import, that we come down and the renewables go up. I think in the US, just one other observation before I hand over. In the US, yesterday, President Biden did talk about many of the wells closed become viable again. Shale gas in particular. All that becomes viable the moment the prices go up. Number of licenses, he talked about 3,000 or 4,000, I forget the figure. Number of exploration licenses given, most of them not producing in the US, conserving it for the future, or the prices were low, those become viable. So finally, at the end of the day, dependence upon Russia or OPEC or meaning a single set of consumers is going to be one, consuming energy more efficiently across the board, that's demand side management. Second, finding out the alternate sources of energy, which will give us an opportunity also to meet our commitments of everybody with respect to the greenhouse emissions.
Absolutely. Very valid points there. Let's see what happens really on that front. Coming back to you now, Shubhamoy. So as far as the, bringing in another aspect, something that we touched upon in Rajay Dua's opening remarks as well, our budget and everything else has been accounted for oil being at $70 a barrel. Now it's almost $130 a barrel. So what happens to, all of our budgeting now going forward?
Look, let's put it this way. A year has 365 days. The Ukraine war has been on for 14 days. So let's get some perspective about, when people go over the top saying, oh my God, all the numbers are off. It's not that bad. Let's try to calculate, if the numbers stay at 140 or 120, we will get into a current account deficit of 3.2%. But for 3.2% of GDP, will need the oil to stay at 120 or 130 for 365 days. Are we really saying that the prices are going to stay that high for that long? The reason why it will not is, first of all, the oil market is an entirely competitive market. The guys who sell the oil, there's no shortage of oil in the world. The problem is about the sudden cutoff of Russia's 7 million barrels. That can't be filled up. No matter what Venezuela says or Iran says, they can't bring oil into the market. Why? First of all, their investment in their oil infrastructure has been hit by sanctions. Venezuela just can't pump that amount of oil that is needed, even though technically they have. So it'll take time. But will they not try? Yes, with the money that's going around, with the inducement that Maduro gets in terms of getting the sanctions off his shoulders, he'll try. Same with Iran. Iran will say that I will supply more gas, but they'll take time. So what I'm saying is that given a quarter, just a quarter of, that means 3 months, you will see the oil supply matrix changing drastically. The supply, there'll be much more supply coming into the market. And Mr. Biden can be thanked for the fact that he's created an even more cowboy culture into the oil market. That there is now no rule in the world market. There never was. They're very thinly policed, but now it's entirely out of all rules. So essentially then, India, China, Japan being the 3 largest buyers of oil, they obviously will be they have got their act together in terms of saying that we are the guys who will be buying. Now what Mr. Biden has essentially done, he's essentially ended up making Europe pretty poor. Europe was depending on cheap oil from Russia and gas. Now Europe will be buying a far more costlier oil from Asia, from America, which means that the entire beneficiary of this war is essentially the US oil and gas companies. It was for them that this war is being fought. And obviously at some stage, people will realize that there are others in the game who can also participate. So what I don't suspect, so the budgeting numbers, today it looks very scary. Sure enough, it looks scary. It can go up to 300, and who knows, it can go up even higher. But these are all extremely short-term phenomena. First of all, unlike Iraq war of the 90s, no oil or gas asset has been bombed. The entire oil and gas pipelines are pretty much in place. It is just American sanctions which is creating the havoc in the market. The sanctions, their force cannot stay on because nobody will enjoy the prospect of seeing the Americans getting richer and Europeans getting poorer. India also has got ability to take it on. As Mr. Dua was rightly pointing out, we import a hell of a lot of oil and gas, and we can't do without it in the short term. That will happen. But what will happen is that we have got a very diversified basket from where we import. That diversified basket will be putting more pressure on the guys guys with whom we were not around to negotiate when the prices were, say, 100, when they were charging $90 or $100, we can, over time, we can now give them the assurance that we'll buy the oil from you at 100, considering that somebody else is trying to sell at 120 or 110. So, these factors will start coming in. There'll be a robust play. And that's why, and even as we speak, the Ministry of Petroleum and others, they are essentially guiding these guys to do all that it takes. So I don't expect the prices, the budget to be as badly spooked as is being thought of right now. It will be spooked for sure. There will be major. In fact, what we'll find out is that the government, rather, for very good reasons, will try to pass off a lot of its deficit and weaknesses under the guise of this oil price. And we'll say that, we can't help it, boss. That's where the problem has come along. So good things that they should do, they'll actually take cover that we were caught in a hard situation. It's like the COVID situation.
Right.
So they will try to pass off a lot of their inefficiency there, which is fair. I mean, that's what most governments do. But what the short of it is that the budget numbers will be bad, but not as astute as it being made out. The pump prices at the pump will be rising. They'll be rising gradually, I suspect. They'll keep on rising for some time. But what I do expect is that the oil world, the forces of demand and supply will be now pushing to balance. Absolutely. As I said, 7 million barrels of Russian oil cannot be overcome. Shortage cannot be taken cover of in one day or even in a month. But gradually the process will be starting to come along. And Russia itself, to stay as a viable entity, even let's say Putin goes off, supposing Putin is overturned. If the United Nations comes over to take over Russia, let's assume that sort of a thing, or Ukraine, something happens. What will happen? What's the first thing that they'll sell? They'll sell oil. They can't sell anything else. How do they finance the reconstruction of those places? It has to be more selling of those products. And that will be coming into the international markets. So there are lots of these extenuating factors that will be coming.
Absolutely. Absolutely. All right, gentlemen, time to get quick closing comments now with the best way forward and what next. Starting first with you, Mr. Dua.
While broadly I agree with Submoy on his analysis, I think every dollar increase in price of crude, I'm not saying it should be $30 or $40 as it is today, itself turns into about $2 billion a year for our budget. That much of subsidy would have to come from the government. If the oil marketing companies are not to be allowed to increase the prices. Very roughly, at $70, our bill was $150 billion. So for per barrel, it is $2 for every $1 price. So I'm just saying, if it is one, it will be $2 billion. It's 10, it is 20. So it is going to upset the budget. The budget upsetting means what the government has prioritized. And this year, as we all know, and we are all gaga about it, was the infrastructure expenditure. That will get hit, and that will have effect in the long term, medium term, long term, and short term for employment and others which were expected from it. That's number one. Number two, the dollar goes up to 77, or I don't know what it ended at today. But even if it's in that range, some people saying very good for exports. It's very good for a country which is exporting more than importing. But when we import much more, we have a deficit of $150 billion on current account deficit. So for us, it hits us more. Our imports get hit much more. And the two items which we count now, talked about 410, which we might reach this year. He himself said that I'm more worried about the imports. I'm more worried about I want a stronger rupee, etc., because of the imports. One, gems and jewelry have very high import content. Price of gold rises, price of diamond rises. You make a very little money on those exports. Similarly, your oil export. We are as refiners, Jamnagar and company, they refine, and that gets counted as exports. There too, it's a thin margin. Volumes are high, but the import value is very high. So as second, some of our exports might increase, wheat, steel, but let's look at our commodities in general. We will be paying much more. We import other than crude also a whole lot of commodities, be it aluminium, copper, silver, gold, nickel, all that kind of stuff. Prices go up. We import a lot of food led by edible oil, sunflower. We are already worried about where will the sunflower oil come from. It used to come from Russia and Ukraine because our food is fried. We need oil, and we've got used to palm oil. Malaysia, we have our own set of problems. we need to turn more to Indonesia, all that kind of stuff. Even in our food, I say we have a dependence on fertilizers much more to grow the food. Prices of all those food items go up. So I'm afraid that we are going to be hit a little more than what my colleague Subhamoy mentioned as we go forward, and the government's abilities to tax, with the country always being in an election mode. We have 4 more elections, Frank, down the year, during the current year. 5 we are completing, 4 we shall see in the last quarter, and then the 24 elections. I don't know how much the government is able to pass on to the customer.
Absolutely. And Shubhamoy, please close the show for us with your concluding remarks.
It's pretty simple. Like you can always say that we'll be hit much more. Sure, we've always been hit much more. Which was the era when we didn't get hit by oil prices, whenever oil prices rose. The point is that this time we have got a slightly better arsenal. What is the arsenal? One of the arsenal that we have is that we export our current oil also refined. That is a very strong arsenal. We'll also be having a couple of other things. Will that be enough to sail Indian economy through? No, it will not. But what a very good thing that has happened is that the gravity of the oil price rise has been borne in upon the public. The public has seen it. So no government going into the election will have to say that, I need to keep oil prices down. It's become a non-election issue because prices rising is visible. If at this forum, at any other forum, the only thing we are discussing is how much it will rise. So how does that, so that I think is a good thing. The rest of it in terms of how it will pan out on terms of the economy, yes, it'll be a pretty chaotic ride through this year in terms of the oil economy. So that will definitely be there. How big will be the chaos? Nobody knows. That's why it's called chaos. Because essentially all governments, state, central, and municipal, and I hold it as a responsibility of the governments over the last several decades that they have not been able to do a good amount of energy security planning despite being warned about it repeatedly. I think that has been a big failure of several governments over the past few decades. It's not a happy thing to end the note, or a happy thing to end on, but I think collective amnesia has got a lot to do with what has happened over the years. Thank you.
Oh. You'll have to unmute, Mr. Dua. Please unmute and make your final comment. Yeah.
Teacher of mine in college who couldn't pronounce the word chaos the way you do, he used to call it chaos.
All right. On that note, then, gentlemen, we'll have to call it a wrap on this edition of Big Picture. Thank you to both my guests for joining me on the program and putting things into perspective for us. Well, that's what's coming out of this discussion, of course, that oil prices are rising, and it's definitely going to have an impact on not just the global economy, but it's going to have an impact on the Indian economy as well. But India right now is better off than before to try and deal with the situation, because we have a few tricks up our sleeve and we have a lot more arsenal right now to deal with the rising oil prices, is what the guests are suggesting. But whatever said and done, it is definitely going to have an impact on the economy as such, because the oil prices are now at a 14-year high, and it's only likely to go up further. And that is something that we really need to brace for. With that, it's a wrap of this edition of Big Picture. Before I go, let me just remind you once again to like the video, subscribe, hit the bell icon, and share the content as well so that more people get to know about Bharata First. And that's it from me. See you again next time.